it's been 2 weeks since SVB crisis really originated, over 2 weeks almost, and on the back of that, the FDIC has now decided to hand over the bank as a whole to First Citizen. This involves First Citizen to assume all assets and liabilities of SVB Bank outside of SVB Private. So we are seeing SVB Bank in terms of deposits and in terms of its asset base, all handed over to First Citizen. With it will go around $72 billion worth of assets, which have been taken over at a $16.5 billion haircut. Also, FDIC will give a line of credit to First Citizen with regard to liquidity, which First Citizen may require in order to make sure that they are able to take care of all the liabilities that come with it. So this is of course a contingent liquidity credit of sorts, which and a line of credit which has been extended over to First Citizen along with this takeover. FDIC also will incur a $20 billion loss on its deposit insurance fund on the back of this particular failure in terms of the Silicon Valley Bank in the entire crisis. Now, First Citizen will of course take over and assume all of the role and responsibility to deposit holders of, or the erstwhile deposit holders of SVB, and all the erstwhile SVB deposit holders will now get a deposit account with First Citizen. For those who lack context or don't fully have the clear picture of what's happened with SVB, Silicon Valley Bank had a classic asset liability mismatch problem around 2.5 weeks back. What happened was that because of the rates rising very quickly in the US, mind you, the US 10-year bond yield has gone up from 1.5% at the start of last year to currently 3.5%. As bond yields rise, the price of the bond falls. So there's an inverse relationship between the two. So a lot of the deposit holders which held deposits in SVB deposited that particular or used those deposits to invest in government securities, which it regarded as safe. And it would have been safe except in one particular scenario, if rates started going up very fast. And that's exactly what happened. Unfortunately, they had to start selling some of their assets at a discount, due to which their losses climbed materially, and after a point they weren't able to liquidate their assets quick enough to be able to fund the demand from the deposit holders, due to which the FDIC then assumed responsibility and took charge of the bank to safeguard the deposit holders' interest in the bank. And now, of course, as I did mention, FDIC has gone ahead and sold the bank to First Citizen. And now First Citizen will take full responsibility of SVB. So this is how the crisis is played out. Of course, whether this is the end or whether this is the start to something larger, we can only wait and watch. But at the moment, it seems like this particular saga has come to a close, and Silicon Valley Bank as such has protected a large part of its deposit holders.
If you like this video, then like, share and subscribe to ET Now.